about cash flow forecasting. I see so many companies that do not have a proper cash flow forecast. How do they get started?
Well, cash is the bloodline of your business. So that is your compass. You need to know where you're heading. We advise all our clients to build a 13-week cash flow forecast. And the most important thing to start with is looking what goes into your cash flow forecast. You've got your accounts receivable, your accounts payable, but it's very important to also include the pipeline of your sales and the estimated cost of those sales.
Well, and then accounts receivable, because you might have sales, but what if it takes you 45 days to get that money?
Definitely. So build a really good forecast model where you're able to put in due dates and expected payment dates to help align the cash out inflows and the cash outflows.
So let's talk about some of the mistakes that we see clients make and companies where they're trying to align their cash flow forecast with their profit and loss statement. And there's a lot of things that are going to be in your cash flow statement that are not going to be in your P&L. Give us some examples.
Definitely. There may be payables that are booked in prepaid that are not yet on the P&L, but making sure that you have a good schedule of what payments are scheduled, like installment payments or premium payments for your insurance that you have financed. It's important to build a model in Excel that allows you to move those estimated pay dates and expected incoming dates so that you can really align inflows, cash inflows and outflows based on the expected pay dates, not based on what your P&L shows.
You make a really good point about installment payments, and people also don't think about their credit card payment, because all of their credit card expenses are going automatically on their P&L, but they might not pay their full statement balance, or they might pay some of their statement balance, or maybe they pay all of it one month and not any the next month. And so that's going to directly impact your cash flow forecast.
Definitely. And the credit card statement will not show as a payable. If you pull your accounts payable report, it will not be reflected. It is a balance sheet item that you need to build into your cash flow. So you can't really rely on just the regular reports that you export out of your accounting system. You have to understand what goes into your payables, whether they're on the balance sheet or not, and build a line for them in your cash flow. Interest
Payments too might not be properly accounted for. You might have a big balloon interest payment that's due. And so if you're just taking your cash flow forecast and you're looking at the money that you're kind of getting from customers and the money that's going out from your accounts payable, you might be missing some crucial things. So I think at the end of the day, it's really important that you have some professionals look at your cash flow forecast, prepare your cash flow forecast, and make sure you always know the score.